and welcome to Friday's podcast. And it's been another week of two halves, hasn't it, James?
It has indeed, Ian, hasn't it? It's amazing. When we were chatting on Wednesday, the markets were up, weren't they? US futures were pointing up, and we thought we could focus on company results. But roll on 2 days, and the US markets got smashed last night. The S&P down 1.7%, the Nasdaq down nearly 2.5% yesterday. And both are now well below the 200-day moving averages and looking perhaps a bit oversold. What's your thoughts?
Yeah, I mean that's the problem we've got when we do these podcasts is, and I think investors have, is that every time it feels like we might be approaching a market bottom, something comes out, another tape bomb. It's either Trump making some comment or somebody's bombed another facility somewhere, and down we go again. I mean, it hasn't gone down as much as it did last. As you say, it is oversold. It hasn't gone down quite as much as it did when I look at my chart last April. It's definitely down more than it was in November. So we are looking oversold on all the technical indicators like RSI, moving average convergence, divergence, the MACD. The problem is that you just can't time this market. It would be great if we could all, we were all that clever that we could all do that, but it's just not the case. So the best strategy, and we've said it before, is stay invested, time in the market, because what we do know is that the market's worst days are typically followed by its best days. And if you miss that rebound, it really affects your long-term performance. So,
Absolutely.
all we can say is don't try and time the market. Just, it is stressful. We're as stressed as everybody else is, but you've just got to stick with it. On a positive note, though, what has grabbed you this week?
Yeah, well, we have had a couple of beats on the corporate front. So we had Next, ever reliable high street retailer. So it nudged up forecast again as we thought it might do. But Next did warn of an extra 15 million costs arising from this Iran conflict. So that's if it
Even
lasts for
then,
3 months. Yeah, so one to keep an eye on. THG, formerly known as the Hut, also beat forecast, but again, it's a loss-making business at the bottom line. So that people have to go down that P&L before they get too excited. And then it's been another busy week with investment trusts, hasn't it, Ian? We had AG on yesterday with Nicola Takada Wood.
we did really, really interesting. Who knew there was so much hidden value in listed Japanese stocks?
Yeah, absolutely, absolutely. This week on the web, we've been writing about biotechs, which was very interesting. So we've got a little mini feature on there that people should definitely take a look at. And we've had a bit more action in the REIT sector, haven't we, in terms of takeovers, Ian?
We have, James. Yes, we've had a couple of deals. There are a couple of deals on the table now in the REIT sector, which kind of went quiet for a while there. We saw Custodian made a couple of very clever deals buying family office portfolios, but this week, and interestingly, Laura Elkin of AEW UK REIT was on a podcast on Wednesday, or was it Tuesday? Couldn't say anything, and then later that same day, I was watching the podcast. Later that very same day, it was the AIC organised it, worth watching. Later that very same day, the announcement came out that they were actually looking at alternative income REIT, which is probably about a third the size of AEW, but a good fit strategically and financially. And knowing Laura, I've no doubt that she'll be quick to run the slide rule over stuff that doesn't fit, and we'll, monetize that and reinvest it quickly. We've also got Picton Property Income, which is being picked apart by London Metric, which is a serial acquirer in that sector,
Yeah, it
and
is.
interestingly, Schroeder Real Estate Investment Trust. Now, they haven't been a big consolidator, and London Metric owns a 12% stake in Schroeder Real Estate, SREI. So, getting them on board is an interesting strategy because it kind of spreads the risk, spreads the cost, and they will divvy up the assets. It's yet to be decided exactly. We put a note out on it today with some thoughts on from various people on how that one might work out. But yeah, more M&A activity in the commercial property space. It's heating
Yeah,
up.
yeah, and we shouldn't forget more sort of the latest saga in the Saba story with Herald. So they're looking for a tax efficient solution for this backstop tender. They try to revolve their spat with Boaz Weinstein, so that's another one to keep an eye on. Anything else caught your eye
Yeah,
this weekend?
absolutely. There's not been a lot of corporate news, to be honest, James. I mean, Cohort, one we like, small cap defence stock. They won a
Hmm.
couple of contracts from the Portuguese Navy for communication systems. Great company. I mean, we mentioned it in our under the radar feature back at the beginning of the year, but the shares have had a really good move. They're up something like 30% already this year.
Right.
The really interesting one for me was Capita, which, I mean, if you think back 10 years plus, it was the market darling. It was a multi-billion pound company. Shares were like 100, 110 pounds. They're now around the £2.50 level. And it's, lost 95% of its value. There were a few managerial missteps, plus they kind of, pricing discipline wasn't great. And if you remember at the time, a few of these facilities management firms went bust, Interserve and so on. So they really out of favour. They came up with a deal. They announced a deal this week to sell their private sector contact centre business for £1, and the shares jumped 14%. But there's obviously more to the deal than meets the eye, because it's not just £1. Over 27, 28, they should get around £65 million as long as the business performs well. So they sold it to private equity, got it off the books, and the really interesting thing is it's this simplification process that Adolfo Hernandez has been putting the firm through. Streamline it, reduce your overheads, and together with some cost savings, the firm reckons that they can increase their operating margin from 5.2% to 7.2% in by 2027. Now that might not sound a lot, but proportionately, that's a big deal. You're getting on for 40% increase in your operating margin. So yeah, the market really like that. What have we got to look forward to next week?
Next week, well, hopefully it'll be a slightly quieter week, so Trump's done another Carco move, giving Iran 10 days to negotiate. Whether the market buys that anymore is another question. But company-wise, we've got Nike. It's always a big story, as well as the iron brew maker AG Barr and Raspberry Pi to look forward to.
Yeah, AG Barr, I know one that you follow closely over the years, and they did a couple of deals this week, didn't they?
They did. It was a while back. I think it was Fentimans and Frobish's, a couple of drinks companies. But they've also, I think, relaunched the Iron Brew Zero Sugar branding. So I'll be keeping an eye out for that next time I'm down the supermarket.
Yeah, well, it's an interesting part of the market, isn't it? Because there's obviously this. We've talked about applied nutrition before and the drive towards wellness and healthy living, and of course, a lot of people are sort of moving away from alcoholic drinks towards that soft drink end of the market. So strategically, that kind of makes sense. And I think when I looked at the AG Bar website, I think their motto is to double in size and then grow more.
Oh wow, okay, yeah, no lack of ambition. I like it.
No, absolutely. And we've also got Raspberry Pi. Now, that's an interesting one because it came with great fanfare, didn't really
Hmm.
do a great deal. And then earlier this year, it was February, middle of February, the shares suddenly spiked. And nobody knew exactly what was going on. We talked about it on this podcast, in fact.
Yeah.
Nobody quite knew what was going on. At one stage, they were up 100% within a week. And it kind of that came back. And people were saying, "Oh, it's all to do with AI and they're being able to use it with their, affordable PC motherboards and all this sort of stuff." I mean, as Steve pointed out at the time, actually the CEO had bought some shares. Now that is probably what was behind it. The firm did outline what it was going to make roughly in EBITDA terms. It did also, however, in January say that DRAM availability was becoming a headwind. And so while it said it knew how many units it would ship in the first half of this year, visibility wasn't that great for the second half of this year. So that was January. I don't imagine that situation's improved, to be honest,
Hmm.
but we'll see what they have to say. And I think, does that just wrap it up for us, James?
I think it does.
Okay, so if you've enjoyed this podcast, of course, as always, like and subscribe on your favourite podcast provider. We also should say we have, if you've not listened to it yet, you must listen to the AVI Japan Opportunity Trust podcast, which came out on Wednesday. And we have two more managers coming on Monday and Tuesday next week. On Monday, we've got Catherine from Migo Opportunity Trust, if I'm right. And on Tuesday, we have Laura Foll from Lauderbencher, James.
Lord Adventure. Yeah, looking forward to that. So stay tuned.
Yeah.